YouTube, how are we doing? Today's topic is simple. We'll be discussing liquidity. We are discussing liquidity. So I've just brought only two types. We do have the equal highs and equal lows liquidity. We do have a trend line liquidity. So I pre-done these things for you guys so that I might not waste most of your time. So yeah, a quick one. We're gonna focus on this one, the double bottom and the triple bottom liquidity. So this is the thing now. When we're discussing issues of liquidity, maybe you might be having a series of highs and lows. So just quickly change this color first. I need something a bit lighter. I think blue, yes, blue. I think it's fine. So you might be having a series of lows and highs and lows and highs. Then you tap is this area. You realize this area, instead of coming back, because usually when we're looking into a trend, we get a break of structure, which is our B, a break of structure. Then we're anticipating that the market will come and tap this area here and our order block and push to the upside. This is what we anticipate when we're looking forward to a particular trend. So in this case, you might see yourself in the market that you faced with this challenge where you break structure. After breaking structure, this is now your new weak high, and this is your strong low. The strong low is here. Then the market, when it pushes to the downside, it doesn't reach your supply. It doesn't reach your supply. It comes down, it taps here, it comes back, and it comes again, it taps here, it pushes to the upside. In such instant, you and I will know that this price has not yet completed its task. It has not completed, especially if you see this type of a scenario. You must just know that here liquidity has been built. This is where your retail traders would see this movement and it comes back. Okay, now we are entering. This is a double bottom. We received the break of structure. When they see this happening, the price coming back here, they come here, they put their entries, then their stop losses are just below here. But as an SMC trader, you then know that this is not complete. You then wait for this price to move, sweep the liquidity, tap into your supply, then it pushes to your direction. All the stop losses, steady retail traders that are banked here, I'm speaking about serious money here, the stop losses are just banked in this area. The price comes, sweeps them, tap into your trades, then it moves to the upside. So this is your double bottom liquidity. You and I, this is where we'll place our trades. Chances are we'll be here maybe at the 50, but for this video's sake, we'll just put it here and this below this. Then you're expecting a push to the upside. maybe you know your low, your high is this one. You know that when the price comes to sweep this liquidity, taps you in, these are your targets. Now this is the triple bottom type of liquidity. You get into this, the price comes the normal way, it taps 3 times and it moves to the upside. Now here's the challenge. You broke your structure here and you went in, but you never came back to the previous unmitigated zone, which is this one. You never came back to the unmitigated area, and you realize that the price have been playing around one area like this triple bottom. In such an instant, our normal retail traders, this is what they will be doing. They are marking this, the price broke structure. After breaking structure, it came to the downside, it pushed up, it then came back again. They're seeing a nice opportunity to buy, it comes back. They then enter trades, they put their stop losses here, they enter here. Let's say they are entering here, and this is where their stop losses are. Then the price moves. They are happy, they are in profits. There's a nice break of structure here. They are happy, they are in profits. Their assumption is that the price will come back maybe here and push to the upside, not knowing that whatever that has been created in this area is just liquidity. It's just liquidity. It's liquidity all over. So you and I, we know that price, the moment it gives us this, we know. It goes without a question. We know for a fact that this liquidity must be swept. We'll become patient. You know what they say, money leaves the impatient and goes to the patient. We know. Then the price does what it does best. It comes, sweeps all the liquidities, then it continues. You are in a trade, all the liquidities were swept, then boom, you are in trades. The other ones, they're here on a bearish trend. Same applies to that side. Double bottom, triple bottom, double top, triple top. The price does the same thing that it does. It comes, it moves in this way. We expect this, then a push to the downside. We're not gonna be moved when we see this. We're not moved. We know price must just come and sweep all the liquidities. It must just come and sweep all the liquidities. Ours is one. Ours is one. We're only looking forward to price sweeping liquidity, then we're good to go. All these things, we don't care about this noise. We have seen it ahead of time, then we are ready. Price, you should just come back, sweep all liquidity, tap us in, then let's push to the downside. That's all we're looking for. Same applies also on the other side. Same applies also on this side. The price has been moving nicely. It gave us this triple top. It gives us this triple top. We are not hesitant when we see a move here. When the price is moving here, we're not moved. This touches, we're not moved. We know that This is our unmitigated demand level. The price can't give us, it can't catch a trend without mitigating the previous unmitigated areas, especially when there's liquidity. I think maybe in the previous video I've shared that for us to know what's really happening, we're looking into three things. The confirmation of our trades are three. Number one, let me do this. One, I think you will take screenshots of this. One, we look into inefficiency, IFC. Number two, we look into unmitigated zones. Three, liquidity. So if these are the things that you will be looking into maybe when you enter trade, this area, this entire area here, there's a high level of inefficiency that has happened here. This is liquidity now. Then this zone has never been mitigated. All we're looking forward to, mitigation, sweep of liquidity, then a push to the downside. That's all we're looking forward to. Nothing else. Nothing else. So that's basically that. In such an area, we know that this price, it will come back to tap us in. That's what we know. We just need to stick to the price, to the trading plan. You must just stick to your trading plan. There are always temptations not to stick to your plan, but my advice is that before you trade, you must have certain rules and follow those rules. Now we do have this. These are trend line liquidities. Now this is the price. It moved properly. It broke structure. It then continued, giving us a nice order flow. It's a nice order flow. And somebody will look into this and say, no, this is a nice bullish, which is right. We are on an overall bullish trend, but this is liquidity being created. This is liquidity being created. In such a case, this is what we're expecting. This is what we expect. We expect this move to come and sweep the liquidity, taps us in, and we push to the upside. As simple as that, guys. As simple as that. Same applies to this one. It's an overall bearish trend. We are bearish, so we have a nice order flow here. We have a very nice order flow here. You might be trapped here and you're thinking we're continuing like this, forgetting of all this inefficiency and the demand zone that has never been mitigated. So in such a case as well, this is what we do. Patience, that's all. Patience is key. Patience is key in this area. Oh shucks. Okay, it's giving us trouble. So in this case, we know that the price must mitigate this entire liquidity here, tap us in on this, come to the downside, overall trend. So all these small moves, we're not moved with them. We know for a fact that no. We are actually on this trend. Therefore, that's what we're gonna be waiting for. And the price will do what it does best. Sweep liquidity, then push to the downside. There is more to show you. This is not only how to spot liquidity. So this is the line that you use. You need to spot the liquidity before you become the liquidity. So the price here, you see what's happening. Just a quick example of more things that you must look into. You have this. There's a break of structure. You have a break of structure, and also here you have a break of structure. In this case, one will look into this area and say, no, this is my order block. Now this is what the price might do to you. The price might come back, touch the zone, then sweep liquidity, then continue to the upside. So in this case, if you look it well, it swept this liquidity here before it tapped you in. But in the process of this sweeping this liquidity, it also created a bit of a trend line liquidity on the other side. So those are the things that you need to look into when you are trading. This will only be a reactional zone. It's not necessarily an order block, because you might be here and you're thinking, shucks, it taps you in, you see small profits, then you just blink your eyes, soon the market came back to where it's supposed to go and sweep all the liquidities that have been collected here. So I hope this will help you in terms of your entries, so you can understand the liquidity concept. See you on the next one. Please do subscribe, comment, and share this channel to others. Yeah, we'll see you on the next one.